Okay, we've got question number 4. Question number 4 is a cash flow question, and I can tell that because if I look down the bottom here, it says prepare the operating section of a cash flow statement as at the 30th of June 2018 using the direct method. Now, in doing that, we're just looking at the operating section. So the operating section, if I make a note here at the top, so my operating activities equal my current assets, my current liabilities, my income, and my expenses. My financing activities, they include any increases or decreases in my non-current liabilities or equity. And what else we got? We've got investing activities. They will be increases or decreases in my non-current assets. Now we're only looking at this section up here. So that's all we're required to look at. No problems. Let's get going. So if I look down here on my balance sheet, I'm looking at these are my current assets. So from there down, they're my investing activities. I've got what have I got? Accounts payable, accrued expenses payable, notes payable, but they're non-current. So this looks like my operating activities here. I've got some notes payable here. Share capital, retained earnings, that's all non-current liabilities or financing activities. And of course I've got an income statement, so there should be a lot in there for my operating activities, and I've got some additional information down here. My additional information says in 2018 Capricorni Limited declared and paid a cash dividend. Ooh, that's interesting. Cash dividend of $64,000, but that's a financing activity. My notes were issued at face value of $180,000 in cash. These are long-term source of borrowing. Once again, that's a financing activity. Equipment costing $360,000 was purchased for cash. Okay, that's an investing activity. Equipment costing $40,000 was sold for $34,000 cash. Well, that makes, when the carrying amount of the equipment was $36,000, that's an investing activity as well. And ordinary shares of $200,000 were issued to acquire land. The vendor of the land received shares in payment for the land. Okay, so there's no exchange of cash there. So I'm going to call that a non-cash item. So now that I've tagged all my items, I can go about creating my cash flow statement. I'll just slide my... And the first one I'm going to look at is my accounts receivable. My accounts receivable, let's slide this one down a little. Okay. Accounts, that's a U in there. Now, I've got an opening balance in my accounts receivable of $30,000 and a closing balance of $24,000. So I'm going to put those in. So $30,000 is my opening and my closing, because what I'm aiming to do is find the cash flow in my accounts receivable. Now cash flow happens in two ways. We make credit sales, which will increase my accounts receivable, and then we receive payments from customers, which will decrease my accounts receivable. Now, as I just mentioned, my sales are $1,950,000, so I'm going to tick those off. Sales, now it doesn't matter if they're cash or credit, we're going to put them all in here. If they're cash sales, well, we just collected them that little bit faster. So that gives me 1980. And what I'm aiming to do is if I balance my account out, that should mean 1980 minus 24 equals 1956. So I've just deducted 24,000 from my 1,980,000 and I get 1956. And we'll put 3 zeros on, and that's cash collected. Now I'm going to highlight that one because that becomes interesting when I go to do my cash flow statement. And I can tick off that I've use that, and I've done my accounts receivable. Next one on the list is inventory, so I'm going to create an inventory account. Now we're doing this as a two-step thing because this ties in with my accounts payable. My inventory, we're going to try and work out what my purchases are now because there's nowhere it tells me what my purchases are. So my inventory is, my opening is 320,000 and my closing is 260,000. Now what increases my inventory, as I mentioned, is already purchases. We don't have that figure. But what decreases my inventory is sales, or what we've got over here is called cost of sales. So my cost of sales is 1,320,000. And I'll tick off those two as well while I'm ticking. 1,320,000. That's my cost of sales. So I'll abbreviate that. What do we got? 1580. So I'll balance my account. And this should give me my purchases. Okay, so my purchases then come in at 1580 minus 320, 1260. 1260. Now that purchase becomes interesting in the next step, which is my accounts payable. So let me just tick off that I've done inventory. Got my accounts payable. I've got 120,000 as an opening balance in my accounts payable, closing balance of 104. So let's do accounts payable. Accounts payable, I've got opening. I'm now, because accounts payable is a credit, I'm over this side. Credit balance in my accounts payable. Closing, 104. Now I'm going to take that purchases figure and it's going to become part of what becomes interesting is it becomes part of my accounts payable because purchases will increase accounts payable and payments will decrease it. So 1380, 1380, and this is cash paid to my suppliers for inventory. So I've got 1380 minus 104, and I'm just rounding these down, 1276. Now because I mentioned cash there, I'm going to highlight that one because that becomes interesting as I want that in my cash flow statement as well. So where do I get to? Ticked off those. Okay, I've got prepaid expenses now. So my prepaid expenses, I start with a balance of 16 and I'm ended with a balance of 12. Now what I'm looking for is a movement here, but I'll do the whole process. So I've got prepaid expenses. Opening, we're in the opening is 16,000 and my closing is 12,000. I'll balance my account off. That must mean my operating expense is 4,000. Okay, so that ticks off my prepaid. Now there's no cash flow that I can pick out just yet, but I'm going to now look at my other side, which is my accrued expenses payable. And my accrued expenses payable started with an opening balance of 40 and a closing balance of 30. Accrued expenses, and as it's a payable, I'm over this side, so my opening balance is 40,000. Slide this up a little. My closing balance is 30,000. That's 40. It's 40. So this is my operating expense. of 10,000. And next I want to try and work out what's my cash movement through my operating expenses. So I've got a figure of 352 here, which excludes depreciation. Now, if it didn't say excluding depreciation, what I've got to look at is my depreciation is telling me here it's 36,000, but how much, and it's not a cash item. But if this didn't say excluding depreciation, what I could look at is I look at my accumulated depreciation here, it's 32,000, so it's gone from 0 to 32. So I know it has to be at least 32,000. And then what I'm going to look for is any sold depreciation or equipment that got sold that was depreciated. And we can see here we've got equipment costing 40,000 was sold for 34,000 cash. Well, that's my cash flow, but I'm looking for the depreciation. When the carrying amount of the equipment was 36. So I've gone from 40 to 36. So that makes $4,000 there. So that 4,000 plus that 32 would then marry back to that 36. So that proves that all that depreciation is okay. But now, because I'm not worried about that, I've got 352,000 here as my expenses. So let's have a look. So my operating expense, because I'm looking for what cash did I pay for operating expenses, and this is how we work this one out. Now my operating expense opening balance, 352,000. Now some people might ask, why are you on this side, on the credit side, when you're talking about operating expenses? Now this is the P&L summary, so I might just put a little P&L in here. Now it's the debit in the expense account, but when we clearing out the expense account, it becomes a credit item here. So now I'm going to take my debit item here, and obviously the corresponding credit will be over this side, 10,000, and that becomes accrued expense. And I've got this 4,000 here, which is going to come round and be part of my operating expenses here. So this is prepaid. Now this works out exactly how much cash flowed through my operating expense account. So it's 362, and this is 362. So my cash paid will be 358,000. And that becomes interesting to me as well. I want to put that one into my cash flow statement. So it's a three-step process in order to get that one right, or to get it deduced. And how are we going now? So I can tick off that. I've ticked off my depreciation. I can tick off this loss on the sale of store equipment, because a loss is not a cash flow. So there's no cash flow there. That's just a total. That's a total. That's a total. What? Oh, I've got tax expense here. I've got income tax payable. I start with 0 and I've got 24. Okay, let's flip the page. Start on my opening balance. Tax payable. My opening balance is nil. My closing balance is 24. Okay, I've ticked those two off. So now what's going to increase my tax payable is my tax expense. So I've got a tax expense of of 72,000. Now if I close my account off, 72 on this side. Now, the easy way to deduce it, if my tax expense is 72,000 and I've got 24,000 left over at the end, that must make it 48,000 is what I paid. And that figure also becomes interesting to me. Okay. Now, have I ticked off everything I need to tick off? Let's have a quick look again. Yep, that's all. Yep. Ticks off that, so all those have been ticked. All these we ticked off as being non-operating activities, so that's okay. So now I just have to prepare a cash flow statement for the period. So cash flow statement for Capricornia Limited for the year ending what is it? The 30th of June 2018. $2,018, and we're just doing operating activities. My operating activities. Okay, so let's go. First thing will be my payments to my suppliers. And my payments to my suppliers, we had cash collected of $1,956,000, so $1,956,000. Now next I'll be payments to, no, that's not payments to my site. What am I doing? That's collections from my customers. From customers. Silly me. Now I'm going to have my payments to my suppliers. Trying to get ahead of myself here. All right, so 1956 is my customers, collections from customers, so that's a cash inflow. This will be a cash outflow. That's why it's on this debit side. Cash paid, 1276. Tick that one off. 1,276,000. What else we got? We've got operating expenses, slightly down off the screen. Operating expenses, cash paid 358,000. Operating expenses. Paid. What did I say it was? 358,000. And that's a cash outflow. Next one is my taxes paid. 48,000. And that's it. Now, what is my cash flow? Where's my calculator gone? It's hiding under here. So I've got 1,956,000 minus 1276,000 minus 358 minus 48 equals $274,000. And that's my operating activities, cash flow from operating activities, $274,000. So that's the ticks off what I was needing to do.